Good afternoon, everyone. It's Chris from Axel, Solstice, as well as Vulcan. You can find us on either websites for institution, accredited investor, as well as in the private sector for individuals that want to learn about trading, investment, preserving capital, and so on. We can do on daily basis a weekly tweet about the overall market and what the expectations are. And this is for educational use only, and what sectors are moving and which instruments are up for that day or down in the direction of those moves in regarding the short-term trading aspects of it. We have a weekly video that we do on weekly basis to give an overall outlook for the market. This is for the accredited and non-accredited investors for learning how to trade correctly if you want to do it on your own. Last but not least, to preserve capital, as well as, being an advisor or an individual insurance agent or an agency that are looking for, doing some investments for clients. You can look us up right there on the website under vulcanips.com. Last but not least, remember to check us out at axelatrai.com, and it'll link you to all the sites that you need to get in contact with us. First of all, I have the Nasdaq 100 up here, the micro NQ, and what I did was the micro NQ showed you the level from the prior month, the lows of April, May of 2026, the reset, that double top that happened in June. Then we had the July lows and we had the August run up. But in the last 5 days in August, we had the sell off. This was a Friday candle inside the Thursday. Wednesday was a doji. Thursday was a sell off. On Monday, we looked above and failed, could not take this candle out. But if I do this on an overnight and take the overnight action off, I want to teach you how to look at the sectors, understand the gaps in and the island reversals on the chart to help you out. Let's go next to the S&P 500, and what I want to do is use the micro ES to show you those levels at the same time. I do have the monthly. You can see here I have that prior high that happened in June. This was the rally back up, the little high. Then we had the July double top, the dump. Then we had the rally in August. Then we looked above and we failed in the last 5 days, but we had an inside day on Friday, and you can see my 18 simple moving average is slightly underneath that close, and we have the 50 simple moving average right down here. This was my last month value here, the high and low, and the extensions to the upside and vice versa to the downside. So let's take a look at the SPY, and what I want to do is the SPY, take the overnight, SPY. This is the electronically traded funds for the Fortune 500 ETF, and you can see the island reversals. I probably have taken the overnight. Let's go to in here in the setting. I want to do this for everyone to see it. You can see in the equities, I can highlight or extend the overall hours on the charts to show you where the gaps are. We can see that top here in these double top. But if I do zoom in this area, I wanted to show this a little bit more slightly. You can see that there's an island reversal in the prior month in between June and July. We had this island reversal. When we looked up, we failed, we rallied up, double topped. We had this island reversal, fell down, rallied up. You can see that there's an island reversal up here that's a large one. Then there's one up here that's an island reversal between here and here, barely filled. And there's this one that went up, but we are an inside there. We do have this area to consider, and that level at 758.50. So this is very important to understand on the charts on SPY. How do we look at the measured move and understand the risk? So what I want to do, go to a 30-day 6-hour chart, which is very simple to see. I wanted to show this level to show you this was the Thursday's high from last week. This is the Friday. I'm going to count from Monday through Friday the highs and lows. So we're going to measure this, okay? I'm going to show you how to measure this using a measured extended extensions to the downside as well as extensions to the upside, and I'll show you how to look at it. I did extend from 0 to 100, the 100 through to 200, and I did the coloring on them from 0 to minus 100, and I usually change these colors because if I use Fibonacci's, I'd rather use a cyan color or a flat color for the week to understand where the levels are. And if I extend it to the left, it's going to show you where that gap is. Edit the property, and if I go back in history to the left on that short-term chart, you can see where those minus 100 and the minus 50, where that gap reversal island is on the charts in relationship to the overnight. If I do in the style, in the setting, and I do take in the equities, the show extended hours, and if I do take it out, you can see where those island reversal gaps are in relationship to this one, where that there's this one up here and vice versa to the left if I extend it to the left. That way you are aware of it. So let's go back, put the overnight action on equities, and you can highlight and extend overnight action. It's usually in gray. You can see the difference between the trading hours and non-trading hours. How do I look at the the trading platform and the tools you will use to analyze an option? If I go to the trading desk, this is the analyze tab, and if I do the options here and I want to go to the August 28th, which is next week, from the 23rd to here, we can see that the expected move is $10.33. So $10.33. Remember, there's $10.33 move from the close 765.72. So 1065.72. Go to the chart. And if I want to do this to the top side, we have $10.33 from the close. How do I do that on the charts, and how do I mark it if I want to remove this measured move from here? Remove the drawing. So I'm going to add to the price, which is 765, 700. We'll do this together so everyone understand that we have 765.72, and we have an expected move of $10 point, let's say 35 cents, correct, or 30 cents. 10.35 will make it 776.07. So if I get a marker here and I want to put the marking here in the price action, we want 765. We're going to zoom it in. Okay, $10. That would be 776, 776. We're going to mark it, okay? It's okay. We're going to adjust it, edit the property. I'm going to show you how to do the measured move. 776.10 cents. Okay, and we're going to color it in baby blue. You can see where that price level is, and I'm going to take this and subtract that $10 from that price up there. We're going to put minus $10.31 or 35, whatever. So we have 755.40. We're going to edit the property, and it's going to be 755.4. So we're just rounding the number, that way everyone can see where those levels are. And this is the expected, oops, we didn't change the color. Edit the property, we're going to change it to blue. We're going to extend it to the back 1 or 2 days. So if I'm expecting the measured move to be in this area to the upside or downside, so what I'm looking for is basically the expected move on either side for the extensions. Once again, we're going to take the Monday high and Friday, the Thursday's low. And this is the expected move in case I come into the 50% or 100% to the downside and vice versa to the upside. So what I can do is take this level here that I have on the charts and extend it to the upside and downside. So what I can do is show you how to do this. Get a box, and from that box I'll create this area here of consolidation. I'll activate it, and I'll move it from that price to up here to just show you how to look at the expected move to the upside and the expected move duplicate. and the expected move down to the bottom side so everyone can see where those levels are on the chart in case we get a reversal to the upside or downside if the momentum changes in the market. So this is on the Nasdaq one, on the S&P 500. Let's do the same thing on the Nasdaq. Let's go back to the analyze tab, not the analyze tab, charts, tools, trade. Okay, we're going to go to QQQ, and I'm going to show you how to look at the QQQ. If I look at the August 28th, and you can see the expected move is $15.04. Let's call it $15 flat. So if I'm going to put the QQQ and I look at the QQQ from the Friday's high to the low, we're going to measure it so everyone can understand it. So we're going to do the measurements for the expected move from the high to this low, and we can see where the extensions are to the right or left. Edit the property. We're going to make it baby blue so everyone can see it. And we're going to do the expected move, which is $15 on the charts from the price 713. If I have 713.5 cents, let's call it 45 cents, let's call it 50 plus $15, that's 728 728.50. So I can go get a marker of the price, and 728.50 will be marked somewhere in this area, and the bottom will be vice versa minus 15, and we can get the expected 698.50, 698, and we'll adjust these. That's 698.50, and we can mark this in yellow just so everyone can see it. Okay, this is the yellow, and we're going to mark this one. If we're going to add that $15 to the chart from the 713, so that 728.50 to the upside, edit the property, and that would be 728.5, and I'll mark this in yellow so everyone can see it, and you can see the expected move without doing the measured expectation. If I remove it, now I know where my level in case of momentum shift to the upside and downside, and I can duplicate that distance either to the upside or downside. If I mark this box from here to here, so I can duplicate this to the upside, duplicate, go to the upside, that's my expected move to the top, and buy from the price itself. Let's just put it somewhere here just roughly, and duplicate this to the bottom, and I have my expected move to the downside on either side of the chart. So if I remove this and I do the measured move one more time, this is something that's very simple to do, or you can use the expected measured move on either side to show you where those levels are on the charts if there is an expected move upside or downside on those charts. Remove the drawing. Remember, we're going to trade what we see. Remove this drawing. Remove this drawing. And I'm going to remove that one that we just did right here recently. I believe remove the drawing. And there it is. It's no longer on the chart. So if I go back to the daily chart here, and I wanted to show this, you can see I put a pitchfork down here on this island reversal. I did this in the prior week in the group, and I showed them how to look at the expectation from this level to this high. You can see that there's an island reversal in this area from here to here. That's a big island reversal. When last time we did an island reversal here, we looked down, we rallied up. We have not been able to take this island reversal up here. What I want to do is just mark it with a box so everyone can see it. So everyone can see that there's this island reversal, and we have this one right here, which is a little bit larger in this area from that island, we have not been able to take out this candle or this one on the upside on the Nasdaq 100. Is this island reversal going to fill this gap here, or are we going to fall in and fill the bottom gap in here on the island reversal, and vice versa to the upside? If I mark this from the upside, and we put an arrow down and an arrow down, do we fill this gap and coming back to the expected move on the S&P? You can see I marked last time the gap reversal down here. We do have these ones down here, but what I wanted to do is show you that this level here is very important in this one here, in case I end up losing the 50 and the 18 SMA on the charts on the QQQ. Let's take a look at IGV in the sector rotations. We can see in IGV, I do have something that is called like a W, a price reversal. We have not been able to take this candle out. If this is going to be a rounded bottom, the 18 holds, is there going to be consolidation to break out to continue to the upside of this channel or not? Or do we fall back in between the 50 and the 18 and find this, where the breakout happened in that island push up? Do we fill this gap first or do we fill the bottom one? So that's in IGV. If I look at DRAM, oops, DRAM, you can see in DRAM, it's in that downtrend consolidating. You can see this island reversal. We lost the 50 simple moving average. We are trying to climb. We have to pay attention in case we fill this gap here and we break above the 50 in order to continue higher, or do we come back to the 18 SMA or further down to the 61 where this gap is in order to revert back to the mean. So that's on DRAM. Let's take a look at SMH in the semiconductor. You can see in the semiconductor, we have not been able to take out the 50 SMA, or even if you convert this to 55 SMA, it's still underneath that 55, but we are holding just slightly on the 18 SMA, and we are above the 116 simple moving average. And this was the last time when we did the shoulder. They had the island reversal gap up. We got this island here, and we fell down. Does this mean we're going to continue lower or not? We have to pay attention to the semiconductor. I'm going to show XLK. You can see in XLK that there's an island reversal up here. You've got this one here. You've got this one here. We have not been able to fill this, and we fell down in XLK, but holding the 50 in the on the 18, we're sitting on it, but the 55 would be just a little bit underneath. If I change the 50 simple moving average, I will show you how to do this. You can see it just says simple moving average. I can move that up to 55. I want to show you how to look at it. So if I mark it with a dotted line, so you are able to see where the 55 is holding by a hairline on XLK. Let's take a look at SOX, SOXX, and I'll come into the Magnificent Seven, including Netflix. I'll show you. You can see in the SOX, we are underneath the 55 or the 50. It depends which way you want to look at it. And the RSI is diverging to the downside after the move up. We are creating a lower high. Does this revert back to the mean, or do we come back and end up, because between here and here there's still an island reversal between this one and this one? There's the up island, there's the one down here that's never filled. Do we reverse back up to continue higher or not? We have to pay attention to that sector. Let's take a look at the Magnificent Seven, mags. M-A, oops, I did something wrong. MAGS. There we go. If you look at the Magnificent Seven, I had marked these island reversals when we filled them. We're going to remove this area here. This one's still valid if you look at it this way. If I activate this, activate it, and I bring this down to this area, it's still valid. Okay, everyone, this is still valid to the downside. You can see where it is. You can see that, oops, come on, activate, go to the upside. Okay, we can see where that is. Come on. Okay, it doesn't want me to do this correctly. We're going to do it. We're going to remove it. Hold on, remove it. Remove both ovals. We're going to do it from scratch. So we have this area, the low of it. This is the high of it. This is the reversal in case we do fill and we have this one down here, and vice versa if there's going to be continuation to the upside or the downside. So if I look at here on the Magnificent Seven, including Netflix, I don't have SpaceX. You can see that it is kind of sitting on the 50. The 18 is just right above in the 116. If there's going to be consolidation and change in trend, I will pay attention to a couple of those on that sector, including Google and including Netflix and including SpaceX. I will go first with SpaceX SPCX. And you can see in SpaceX after, the option expire, the option, put wall or the call wall going back up to that 35 IPO. If I do this on the weekly, it may show a little bit more cleaner. Let's just do this. You see the IPO was that open. Remember, we opened at 135 to 55 was the close, the rally up, rejecting the call wall, came back down, consolidated at 107. We tweeted a couple of times at 107, 110 to 150. We called the reversal back up. We are holding the 5 simple moving average on the weekly. So if I go to the daily chart, let's just go back to the daily, and I'm going to zoom in this area to show you these levels. I know I have the measured expected move from this week's high to this low, and I marked it going across. If that call wall, that 135 holds, and I end up clearing that area and running, I'm expecting it to run back up and, clear the 147 to 155 area. If it falls back in, I'm paying attention to the 18 if it does catch it and continue higher or not, because we do have the 5 SMA and the 12 just sitting right above it on the daily chart. So if I go to the 4-hour chart, 20 days, you can see in that consolidation where that 55 is, or the 50 SMA. If I change that back to the 50 SMA, edit the property, and what I want to do is bring it back to the 50 and make it yellow. I like using the 50 more than the 55. A lot of people use the 55 and 12. I use a 5, 18, and 50 myself. You can see that last consolidation here, the double top here, falling back down. If we clear the 18 and 50 off to the races, and if I fall back, I'm paying attention to that 135 call wall as well as the 131 area in case we come back down in this area or not. And do we break out of that downtrend channel to the upside? If I draw a downtrend channel on that linear regression double top, from this side here, and I connect it to here, I'm paying attention to this channel here, and between here and this, we are in that linear regression downtrend pitchfork to the upside in case I clear the 18 and 50, look above and continue, or do we fall back in? Because these are two control points when we fell down last week on SpaceX, and I called the 149.50 get out of the way because we may reset. So that's on SpaceX. Let's take a look at Google. You can see Google is consolidating for the last, 6, 7 days. If I have potential, I am paying attention to that 147 and the expected move in case I rally back towards F3 and F5. That's a 38 and that's a 50%. And if I fall back down between the support and resistance, then I look for the extensions to the downside in Google. Let's take a look at nflx because there are sector rotations. You can see in Netflix on the daily chart, excuse me, little flu, it's happening going around. You can see last month expected measured move, and here the reversal back up in case it consolidates, makes a round because it is in an uptrend. If it creates a rounded bottom and it holds the 78.45, that prior high, I'm expecting it to run up to 116 and a 200 SMA, or the 161% and 150 to the upside on Netflix. Last but not least, let's go to the micro ES, and we're going to do the measurements on the micro ES to show you how to do this. That way you are aware of it. We're going to go from the daily. We're going to go to that 30-day, 6-hour. You can see that's the monthly expected move to the upside, and we fell down here. So how do we look at it? So the most important thing is understanding risk and supply and demand. I'm going to go in here, go in the studies. From the studies, I'm going to load the expected move on the monkey bars on the daily chart to show you where that market profile is for the highs and lows. Let's go to the daily first. Let's zoom down. We can see on the daily chart, I know I have last month Fibonacci to the upside and down. You can see where the point of control is here, as well as the point of control. If I do come in here and mark it, I'm going to get rid of this monthly measured, the prior month Fibonacci, remove the drawing. That is okay. Don't panic, everyone. We can see that the point of control is here. There's another one here in this gap here. You can see on that push up, there's a slight light volume in this area in case we do fill it and they push it further down. That's the first point of control that will find support in the 50 SMA in order to continue higher, and vice versa on the charts in case we're going to push back towards the point of control and breakout. So if I zoom in here, you can see that this level is going back up on the micro ES. Let's do the same thing on micro NQ, and I wanted to show this on purpose. So we can see this one is clear where the point of control where most volume happened in this area. I am paying attention if I zoom it in. This was last month point value area high, point of control and value area low on the charts on the last month monkey bars. So if I zoom in, this is my basically telling you where we are. This is the gap on the island reversal. This is the other gap on the island reversal at the top. In case I do come in towards that gap, it's very important to see between the 116 and the 18 SMA, that's my 50. If my 83 SMA and the F5 does hold, to hold this area where we broke out of, or do we end up falling further down on the Nasdaq 100? So let's take a look at Bitcoin because they are going towards micro BT. I'll use the micro BT. I'll clean it up. We come back to the style. We're going to load up a clean chart on this chart. We're going to do just a clean one, nothing on it. So that way people can see what the expectation we were in that downtrend. We consolidated for a while down in this area. You can see that put wall where it was, and eventually we broke up. But this area here right now, there's consolidation. If I end up coming in, creating a rounded bottom, and continuing higher, that would be better for consolidation instead of those three soldiers going up on Bitcoin. And if I do the same thing with micro Ethereum, you can see the same thing on the charts in micro ET. You can see that large consolidation and the breakout we had on Friday look above and fail. This is very important because this is the gap on the charts on micro ET, which is Ethereum. That would be very important on the charts to continue higher or not. Let's take a look at gold or GLD. I'll show you the micro GC. You can see in the micro GC we were in that downtrend. I'm going to show you this because this is basically hedging due to the Middle East, and I'll show crude as well. You can see that prior reversal where it fell down from, and if I add this one or grab this area here where there was a lot of consolidation, you can see it. And this was a consolidation here, the breakout due to the Middle East retest the backside and rally up. So we have to pay attention to this area up here if price of crude oil comes back in and breaking through that downtrend channel. I mean, sorry, this is on gold. Sorry, I said crude. Let's go to micro CL. My fault. Micro CL, you can see that push up. Okay, the push down, the rally up. We were in a symmetrical triangle. Right now, we created some kind of a rounded bottom, but inside this area. This is very important because there's this island reversal which we tested. You can see it. We tested it right here and filled it. Does this mean we continue higher or do we fall back on that downtrend channel? You can put like some kind of a downtrend channel on these charts so that way you don't end up getting caught in case of falling back down wedge to the backside. And we are in that symmetrical triangle. If I zoom it in, you can see where that symmetrical triangle is on crude. So last but not least, let's go back to the SPY. And I wanted to show here the SPY, the expected move on either side. So I will show you how to look at this measured move to duplicate it to the top or to the bottom on that $10 range. So if I grab this box from high to low, remember we took the price of the the expected move on the option. So if I want to duplicate it to the top, I grab this, duplicate to the top, and I'll put it right. Let's do this together. I'm going to put it right here. So more or less like this, and I'm going to duplicate this to the downside so everyone can see where the expected move is on the chart. So if I do that, so this is the expected move on either side of the chart in case I get two standard deviations to the upside or downside on the S&P 500 or the ETF SPY. So if you have any questions, please get in contact with us at Axel or Solstice. We're here to help. And you can go here in the contact. You can see my email and the contact number. You can reach out to me. Take care. Over and